How's it going, everyone? It's Sam. I want to show you how you can turn $1,000 into $1 million. And you don't need to go hit it big on some small meme coin and get rug pulled 100 times to do so. No, this is actually something that I've done before, not turning $1,000 into $1 million, because to do that, you do have to be a little bit risk on, but I have been able to use this method to stack up and make a lot more than I would normally. Also, I'm going to be giving you a tip or a trick at the end to actually 10x without adding really much more risk to your trades. This is something that I think could be very valuable during this bull run. Of course, you do need to know the basics of cryptocurrency to understand this, and you have to realize that there are risks with anything. If someone tells you that you can go from $1,000 to $1 million with zero risk, they're insane or they're lying to you. So today I'm going to be going through that. I'll tell you all the risks as well. To be clear too, this is something that you want to do after you have the basics down, once you have a good financial position where you can take a little bit more risk. And the cool thing is, some people will say, well, you could turn $1,000 into $1 million just by buying spot Bitcoin. To be clear, you would have to have Bitcoin go up to $70 million or something like that at today's prices for you to turn 1,000 into $1 million. You'd have to have 1,000x on Bitcoin, which it might happen, but it might be 30, 50 years from now. This is something that you could do in the next year or two, and it will make sense by the end. We're going to be talking about leverage trading, and this is something that you can do over at Margex. I'll leave a link to this underneath the video, that 10x trick at the end. That it will make a lot of sense. It's not something stupid. It actually can provide a ton of value to you. You can actually only do it on Margex. From everything that I've seen, you can't do it on other platforms, and I'll explain why that is. They just don't have the ability to do what you need to do here. So if you want to trade on Margex, you can check out the link underneath the video, so that way you can start getting access to leverage. Now, of course, there are risks with leverage. We'll be going through that. First of all, just know that this is not something that you want to do with your whole portfolio. If you have $1,000 to your name, don't do this. Go put it in Bitcoin. Put it, on some exchanges. Probably not even worth buying cold storage at that point for $1,000 worth of Bitcoin, and just sit and watch and try to accumulate more wealth. Now, for someone that's maybe worth $10,000, $50,000, $100,000 or has that much in crypto, maybe it makes more sense to do something like this. And honestly, even with $10,000, I wouldn't be leverage trading with 10% of your net worth like that. That's a little bit risky, but this is something that you can do with a smaller portion of your net worth to get outsized gains. And I've been doing this. I've been leverage trading this bull run, and I've made a ton of money from this. The good thing about this is you can, at opportune times, take advantage of greed and fear in the market, and with some nice bounces, you can make a ton of money. Okay, so let's start with what leverage trading is. I have a ton of videos on it, but it basically just allows you to get access to more capital than you would get otherwise. Now, for example, you could put $1,000 on this platform, or 1,000 USDT, $1,000 worth of Bitcoin, and you could get access to up to 100 times that. So you could make a trade worth $100,000. Now, I think that's risky, but some people do that. Some people use 5x leverage, 20x leverage. We're going to be going through not the highest leverage example today. We're going to be talking about 10x leverage, but you want to do this at opportune times. Now, I think now is a pretty opportune time to be leverage trading for a couple different reasons. I mean, obviously, I was talking about leverage trading since before we even made this run up, made a ton of money on this. And then even here, we were able to play some of these swings where we saw a $48,000 resistance. I thought we would bounce off $49,000, $50,000, something like that. We went down to $49,000 exactly. We longed at $49,500 and then took profits up here. Now, this is great when you're playing these bottoms, when you're playing supports, but we're moving up right now. We're moving up to a point where people are maybe a little bit nervous, right? We're at 69,000. We've gotten rejected by this line 4 or 5 times. But you have to remember, there are several things working in our favor right now. We have large institutions just buying a bunch of Bitcoin. Now, that could change, but that does push up the price. That's what's been pushing up the price recently. We have higher lows, 3 higher lows, and 3 higher highs. That could always change, right? We could come down here, break to a new low. We could not come up to a higher high and just like continue the downtrend. But so far, it's looking bullish from a technical level. We have elections finishing up in 2 weeks in the US. That's not something that can change based on market sentiment. That's just going to happen. So there's going to be less uncertainty in the market. Also, rates are coming down. Also, we have liquidity entering the system. M2 money supply is moving up. Those are very bullish things. So I would not be surprised for us to break out. So when we see a little bit of a dip like this, when some people are feeling fear, that can sometimes be a good time to set up a long trade. Now, of course, we can always fall down. Let's run through the scenarios right now. Let's say you open up a trade. You have $1,000 in it. And Bitcoin's, let's just say it's at 70,000 even. So you're not even getting it right now. Maybe you're watching this a few days from now or a few weeks from now. Even if we're up, at 100,000, you can use these same principles. So Bitcoin is at 70,000. You put in a 10x trade, and then it moves up to 77,000. Great, you're in the profit. Now what? So you're up 100%. So you have $2,000 in there because we moved up 10%, and you had a 10x leverage trade. So you're up 100%. Well, there are 3 different scenarios. Okay, we move up. Great. Bitcoin moves up another $15,000. We move down slightly. Maybe we move down closer to your cost basis. Maybe we move down even below your cost basis. Doesn't really matter for this example. Or we move down to the point of liquidation. So at a 10x leverage at $70,000, you get liquidated around 63,000. So I say this is a negative 114%, but it's really a negative 100%. You would just get liquidated if you didn't have any stop losses in play. Now I would, to be clear, like if we were up at $77,000, I'd probably put some stop losses down here. Like maybe we bounce off this line. Okay, we bounce off and maybe that's at 67,000 or 66,000. I'd probably put a stop loss there because if we retest this line, this downtrend line, and then continue moving up, it's still bullish, but if we break through it to the downside, it would be bearish. So hopefully you would not get liquidated. You wouldn't be using proper risk management there. So in the worst case scenario, we lose this $1,000, okay, $0. In this scenario where we move down slightly, maybe you lose a little bit on paper. Maybe you don't lock that in though. So you would have like $714 of your original 1,000. And then in this scenario, you'd be up significantly, right? You're up 314.29%. So you'd have about $4,143. Okay, great. Now, the question is like, what do you do? What are the different options in these scenarios? Well, in this worst case scenario, if you lose your $1,000, you either stop leverage trading or you roll into another trade at a lower cost basis and less risk. I've done this several times where I was really aggressive with my leverage. Maybe I was on 50x, 100x, something like that. And I got liquidated, but I still thought it was a really good point to jump in. So I just rolled into another trade. There's less risk because we've already fallen down at that point. And there's more upside because if we just move back up to the point we were before on my original trade, I'd be positive. I'd be up significantly. So if you're leverage trading, you have to realize that you can lose it. And I would say you probably want some cash to be able to roll into another trade. In this scenario where we're slightly down, and we'll get to how you turn like $1,000 into $1 million in a second. We'll show that. In this scenario, we either close at a loss or we wait. I would probably wait unless my theory had changed, unless what I thought was going to happen is kind of breaking down, right? If all of a sudden people got less bullish on Bitcoin, like BlackRock came out and said, yeah, we're not really interested in Bitcoin. We think it's fairly valued or even expensive or something like that. Or, I don't know, inflation spikes up and the economy is faltering, we have more unemployment, then you're like, people won't spend money on Bitcoin, the Fed's probably not going to lower rates or something like that, or they're going to have a difficult time, there's a lot of uncertainty, maybe you close out at a loss. But otherwise, I just wait, right? If you think the same thing's going to happen, it's just taking a while and we're going sideways, I'd probably just wait. I've done that on positions before where I had to wait a few weeks for them to be in the profit, and then, it turned out really well. Then in this scenario, the good scenario, you either take profit, you're up significantly, 314%, or you wait, or you roll. The roll is what we're going to be talking about today. This is the column that you want to be in, to be clear. Like obviously you want to be up. And if you open at a good time, you should most likely be over in this column. Like you should be in the profit. If you either open up the trade at support or when it seems like we're at a pretty good point where things are changing to the positive, like where I think we are right now, you should be in the profit. I mean, if you look at these positions, I opened up one trade today and it's just about up 1% right now. It's just going back and forth, but I think it's a pretty good trade. All these other positions are in the green, to be clear. So like I opened them at good positions. I was not greedy. I was not fearful. It was very calculated. And now we're up. So let's say we're in this scenario and we roll. So either you take profit, great. You made a bunch of money. You made $3,000 off of $1,000, or you just wait. You continue to let it roll or continue to let it go up in value. So maybe, let's say Bitcoin goes to 140,000 and you got in at 70 at 10x leverage, you'd be up 10x. So you'd have $11,000, you'd have $10,000 of gains. Great. If you want to get more aggressive, if you want 1,000x, and to be clear, like 1,000x is very hard to get. Like there is risk in this, but it's not going and betting $1,000 on a meme coin. The tough thing about the meme coin market is if you really want to get a huge return, you either have to know something that other people don't, like you have to be in the know with marketing or with, I don't know, some whales or some big news, which can get interesting if you know that kind of information beforehand. But you either have to be in the know about something like that, or you have to spread out your tickets. Like you have to buy a lot of lotto tickets. That can be expensive in bull runs, depending on what network you're on, because there can be large transaction fees. I know some people that were on Ethereum and they had like 50 different coins and then they just couldn't even move them because they were worthless or they were worth less than the fees. I've had it before where I had like $600 in a meme coin, but the fee was literally $500. So I didn't move it and then the meme coin went down to zero. So that can be an issue. Also, you just have to maintain your portfolio a lot. Like you have to be constantly checking, keeping up with things. It can be stressful. And you have to put you have to buy the tickets at the right time. And it's hard to gauge how high they're going to go, right? Like is a meme coin that went from 10 million to 100 million, is it going to stick around or is it going to go down to zero? So it's difficult. That's why I like leverage trading instead of getting into a lot of memes. Now, sometimes I'll pick and choose a meme, but like in general, this is more my strategy. So let's roll this. What does rolling mean? Basically, you close out this position that was up 315% and you roll it into another 10x. Now, some people don't even realize that changes the position at all, but it does. So you're able to, instead of having $1,000 of collateral, you have $4,000 worth of collateral. Now you're starting off at a 0% gain. Your cost basis moves up and your risk moves up as well because your liquidation point is higher. In this original scenario, we're at 10x at $70,000. So your liquidation point is around $63,000. In this scenario, we're at $92,000. So your new liquidation point is about $83,000. So much more risk because the liquidation moved up $20,000, but you can make a lot more because any gains from here are on this original 4,143, while the gains in this scenario are on $1,000 of collateral. So you have 4x the potential, really, when you roll this. Now, let's say we move up to another 20% gain. We're at 100K, and I'll talk about some of the risks of this stuff, some of the tips and tricks towards the end, but let's say we move up another 20% to 100K, 110K. That's a 200% gain. So 4,143 then turns into 12,429. Now maybe we roll again. Okay, so we take that $12,000 position, $12,429, and we roll into another 10x. The liquidation point is now even higher. It's around 99,000. We move up another 20% to 132K. That's a 200% gain. This 12,429 turns into 37,287. Okay, you see what I'm doing here. We do this again. We roll it again. The liquidation point moves up even higher. You have another 200% gain on this leverage trade. It turns into 110K. We do it 2 more times and you get $1 million. Now, is this risk-free? No, not at all. You have to do this at good times. This is still risky. There's no profit taking in this example, which is kind of crazy. We'll talk about tips for that here in a second. And there will be dips of over 10%. And on a 10x leverage, you have to realize a 10% dip from when you roll can liquidate you. And you have to roll at several good points, which can be hard to time. In this example, we're basically 3xing our money over and over again until we get 1,000% gain, which can be very difficult. So how do you de-risk in this example? How do you make it so that this might actually kind of make sense for you? Well, number one, roll when you're up, but you've experienced a significant pullback and are at support. For example, okay, if we look at when Bitcoin made this run up after BlackRock accepted the Bitcoin ETFs, or got approved for the Bitcoin ETFs, we took a big dip here. We took a big dip, but we were at previous resistance. So we were at like 38,000 and we bounced off. You might be saying, okay, well, we're seeing big inflows into the Bitcoin ETFs. We still have Grayscale dumping a lot of Bitcoin, but it seems like the demand is pretty heavy. So you go and put a long position. You put it at 40,000, you ride it up to 74. Now, this is not the optimal time to roll. When you're up almost 100%, if you were just in spot, you would be up 100%. So in a 10x position, I think you'd be up around 800%, right? This is not the most optimal time to roll. I'd say either like back around here when you're up a decent amount, but you think we're going to still fly further, or after we've already taken this big dip down, maybe a roll there at 60,000. Also, maybe if you're more aggressive, like 20x or 50x on the original, maybe you roll it down to 5x, right? Like you don't need another home run after you've already hit a triple, right? Or a home run already. Like maybe you just don't put as much leverage on the table. Maybe you roll it down or roll it again, but you go less aggressive so that way your liquidation point's a little bit lower. So you do it once we've already taken this maybe 20% cool off period. You don't do it when we're up, just only up for 2 or 3 weeks. Okay, that's tip number one. And you want to do it probably when we're at support. So maybe even wait a little bit longer. You wait until we reach something like this, the $50,000 range where we're chopping back and forth. Another tip, don't set some arbitrary goal of making $1 million from 1K. I know it's a fun video, right? It's a fun video, but chances are you're going to lose money. And I've been there before. I thought, well, how do I turn this $10,000 portfolio into $100,000? Then you make arbitrary decisions that aren't the best risk to reward ratio, but they just they're the only ways to get to your goal. For example, I don't know about you, but I don't think Bitcoin's probably going to $700,000 this cycle. I know some people are very bullish like that, but we've already moved up 4x from the bottom. I don't think we're hitting 700 this cycle. So that means I could set some arbitrary goal that I want to be able to hit a 10x on my portfolio, but Bitcoin wouldn't really make sense to put in a portfolio that has that goal. Or maybe you put in a little bit of Bitcoin, but the chances are it's just going to weigh down your portfolio. But we might get a nice 4x in Bitcoin, and that might be the least risky asset. It is the least risky asset in crypto, but you might miss out completely because you say, well, it's not going to 10x. So why would I put it in a portfolio that I want to 10x? When really the risk might be 1/10 of Solana, but the reward is 1/2 of Solana, something like that. So don't set some arbitrary goal, because if you turn 1K into 500K, you should be very happy with that. Don't try to squeak out that last little bit necessarily, because you might lose it all. And maybe use a variation of this. It doesn't have to be 10x leverage. It can be 5x. It can be 50x. Just do what's right for you after you used to leverage trading a little bit more. Also take profit. In this example, we're trying to make the most of our money, but you do this once and make out really well, you might as well take out the initial investment. So going all the way back, you're up 314%. Again, maybe you take $1,000 or maybe even $1,200. So you get a 20% gain, and then you just roll the rest of it. Yeah, I do something like that. I've done that in the past, because you don't want to come out, again, making $300,000 in leverage trades, but never taking profit. Because maybe we don't actually go up to $200,000. Maybe we go up to 180. then experience a pullback, and then you took no profits the whole time. It's like you have the lotto ticket and you're like, I don't want to cash in this lotto ticket yet. Also, if this turns into life-changing money, don't get greedy. I've said that several times in different variations, but like, take some off the table. And then this is the tip that can actually 10x this. It can actually 10x this. Maybe you turn $1,000 into $10 million because of this. Now, this is something that you can only do on Margex because they're the only ones that I've ever found that will allow this kind of collateral usage. On Margex, you can trade something like Bitcoin, with USDT, or with something like Solana or Caspa. You can use altcoins for your collateral. Now, this gets really interesting because this whole example, we talked about Bitcoin. And essentially, we just talked about it using USDT as the underlying collateral. So you put in $1,000 of USDT, and then you get a 314% gain. You have $4,143 of USDT. But we can use cryptos that are going to go up in value. So let's say, for example, we used Solana. Let's say Solana is at $200, which it's not, it's below that. But let's say we use Solana at $200. Okay, we have 5 Solana. Okay, Bitcoin goes up 10%. Okay, well, Solana's probably going to go up 20%. So Solana's up to $240 at that point. Okay, then Solana moves up even more because Bitcoin goes up another $15,000, which is about 20%. So maybe Solana does 40% at that point. I think that would make sense for Solana to go up much faster than Bitcoin. So now Solana's worth $336 per Solana, and you actually have gains of 314%. So you still have this 5 Solana as collateral, but it's up 314%. So you have 5 times this as your profit. You got a profit of 15.71 Solana. But remember, Solana's gone up in value. So actually, you have a profit in US dollar terms of $5,280 plus your original $1,000. So compare this to this other example. Here you have $4,143 off a $1,000 investment. In this example, you have $6,280 off of the same investment. Okay, now where does the extra risk come in? Because there has to be some extra risk if you're going to get a better return. Well, there's no risk in terms of liquidation because you're still trading Bitcoin, right? You have different collateral, but you're still trading Bitcoin. So the liquidation point doesn't change at all. The risk is if we go down, let's say instead of going from 70 to 77,000, we go 70 to 65,000. And you say, I wanna shut down this trade. I wanna close it. My thesis isn't correct anymore. I'm gonna close it. Okay, well, at that point, Bitcoin's gone down maybe 8% or something like that. So your trade is down 10x that, so 80%. But maybe Solana falls even more, right? If Bitcoin goes down 8%, then Solana maybe goes down 15. Okay, your 5 Solana are now worth, instead of $200 a piece, they're worth $170. And you're down 80% on the position too. So then you take your Solana, and your Solana, if you try to sell it for US dollars or USDT, it's worth less than it would have been if you had just used USDT. Keep in mind, if you already had the Solana in a wallet somewhere, like it would still be devalued the same amount. So I don't really see a lot more downside. I guess one other downside is maybe Bitcoin does really well and goes through this whole scenario, but for some reason Solana doesn't do well. It has a hack or something, or it breaks for 3 weeks and then people can't use it, and everything else races up, but Solana does poorly. So maybe you pick the wrong collateral that doesn't actually outperform USDT. But on the upside, typically altcoins do better than Bitcoin. Bitcoin in this example is continuously moving up, so you can amplify returns even more without changing the risk of liquidation. This is something that I've done a lot. Like most of these positions are with altcoins as collateral. Also, if you just take that to the extreme, let's say Bitcoin goes up and it goes like 3x, right? It keeps on moving up. We continue to roll. Let's say we get, we get $1 million in trades. Okay, that's great. That would be if we used USDT. What if instead of USDT, we use something like Solana? Bitcoin moves up, 3x. Maybe Solana does 6x or 10x. Well, imagine if we had done this all in Solana. We'd have 1,000% gain or 1,000x gain, but we'd have it on our underlying Solana. So again, let's say Solana is worth $200 at the beginning of this, and we get 1,000x. We had put 5 Solana in. Okay, so Solana 5 times 1,000. We have 5,000 Solana now, and instead of being worth $200 per Solana, they're actually worth 2,000. I know it's crazy, but there are some people that think based on fib levels that we will get up to maybe $600 to $2,000 Solana. So we move up to $2,000 Solana, and you have 5,000 of them now. Well, that would be a $10 million position. Okay, that is just crazy. This one change that most people wouldn't even pay attention to. No one else can do it because, to be clear, I've asked other exchanges, why don't you allow me to trade something like Bitcoin with Solana as collateral? And they say, oh, we want to work on that functionality, but it's way down low on our priority list. That is why a lot of people sign up for Margex, is because they want to have that ability, because they think altcoins will outpace Bitcoin, but they don't want the risk of the underlying altcoin to be present and change, the volatility of the asset that they're trading and then get liquidated. So they trade something like Bitcoin, but they trade it with Bitcoin or trade it with Solana to be able to get those outsized returns. And we haven't even really taken advantage fully of this yet, because when Bitcoin breaks to new highs, altcoins will probably blow off. Like they will do extremely well. So you can get something like an extra 10x on a trade without changing the risk profile of the liquidation. I don't know if that's the right way to phrase it, but it is an awesome thing that you can do that just other exchanges aren't allowing. So that's one of the reasons that I just love Margex, is that you can do things like that, and there's just so much more functionality and so many more possibilities because of this. Now, as I said, this is not risk-free, right? You can easily lose your initial amount that you're trading if you get reckless, or even if you just pick the wrong time in the market, or even if just some whale decides, hey, I'm the German government, instead of running up to new all-time highs, I'm just going to dump 50,000 Bitcoin over 4 days and then drop the price $20,000, right? Like that can happen. But if you have money on the sidelines and you don't get greedy, that's probably the number one principle of leverage trading. Don't get greedy. Don't just buy because we're moving up, and don't just don't hold on because you just want to get a 2,000% gain instead of an 1,800% gain and not take any profit. If you don't get too greedy and you do this at opportune times, you can make a ton of money. I would make sure that you have some capital on the sideline. Like let's say you have $1,000 to shift into this platform. Maybe you only put up $50 at a time to begin with. Once you feel more comfortable, you take a 10th or a 20th of the portfolio on a trade, or you're trading it at one single time. And then you have more in case we do get liquidated, and in case we do move to the downside, because there are 50% drops in Bitcoin. We've seen not quite a 50% drop this bull run, but keep in mind, we've fallen from, 73,000 to 50,000. So we've seen a 35% drop nearly. This happens in bull runs. So you want extra money on the sidelines so that you can double down when there's an opportune time. You want to be able to open a new position when you get liquidated, and then continue to do that until we get to a point where we just race right back up. And you also want it for your own peace of mind, because then you'll make better trades if you have more potential trades in the future, right? If you have more money on the sidelines. Keep in mind too, there will be some point in the market where we race up, and like this method is much riskier, right? Like leverage trading long on high leverage when we're up at $200,000 per Bitcoin is very different than when we're at the previous cycle high. We've been trading sideways for 6 months. I'm not saying necessarily don't do it, but you could do the same thing to the downside. Maybe you short Bitcoin, which I don't typically do. I'll be honest. I think that's risky. But you could do that with altcoins, for example. Going into a bear market, maybe liquidity is drying up. Maybe you want to do that and do the reverse stack method on something like, I don't know, some smaller cryptocurrency that's raced up. Maybe, I don't even know some of these ones. I don't know. I don't want to piss anyone off, but BLZ, USD, maybe it's gone up 3,000x. I don't know, 200x. And it's just gone up an insane amount. And you think it's overvalued. You think everything's kind of drying up. Things are slowing down. Maybe Bitcoin continues because of the Bitcoin ETFs, but you think alts are overvalued. So you short it and you do the same thing. You take profits when maybe it has a low relief rally. And then you double down on your short position. And then you continue riding it down for the next bear market. I don't know. There are endless possibilities with this. So definitely check out the link underneath the video to Margex if you want to try this out. Again, like make sure you understand the basics before you do something like this, because you can take extra risk, which can be very good. Like the risk of getting in a car versus a horse. There's a ton of upside, but if you don't know how to drive a car, if you don't know how fast you can go when you're trying to turn, like you can get hurt more than you could maybe on a horse if you're an experienced horse rider. So make sure you understand what you're doing. I appreciate it. Check out the link underneath the video to Margex. I'll see you all in the next one. I hope in the next one where I explain this, everyone's made a ton of money. Appreciate it. See you soon.